Hi folks, Lee Gettess here with the Market Sense. For the week of October 28th, 2014, we're going to stare at some charts that come from the Trade Navigator software. And the first chart we're looking at is a weekly bond market chart. And boy, isn't that a funny looking spike we see up there a couple weeks ago. Obviously, they've calmed down a little bit since then. The spike like that, anytime you see a spike like that, it will normally have to be tested. I don't think this is enough of a retest here. I think we'll probably head back up at some point, but it doesn't have to be this week. Actually, I kind of hate doing updates when we have a Fed week because Lord knows the Fed controls everything at that point. What concerns me a little about this chart here is we had resistance right here around 142.12 that could knock them back down if they're going to trend down, and they're still holding below that so far. Now, that doesn't mean that it's a done deal, but they do have the potential to get knocked down then. We have more support here in the 140.20 area, but if they dislike something they hear from the Fed Wednesday, boy, down here to the mid-Keltner channel, the 138 area, I'm not going to tell you it can't happen. It's also possible that they like it and go blowing right through this area and come up to the upper band here at 144.16 or so. That might look more like a retest if they do that, by the way. But which doesn't mean they can't go higher than that. Don't get me wrong. But I think we got to see them bounce someplace up in here. That would be the most likely scenario at some point, but that's, for the rest of the year. That could be in the next few weeks. Stocks actually surprised me a lot more than bonds here. They had a really hard break here over a few weeks, and they've recovered a large percentage of it in about 8 days. I can't figure out what's so fricking wonderful all of a sudden. I really don't. I mean, they're going up at about 1% a day, and it's just absurd as far as I'm concerned. There's always a tendency for them to rally into a Fed meeting, and then there's a risk of them coming down out of it. But what they did is they held this support right here in the 1945 area. They held that nicely and started up, which certainly looks like they're going to target the 1990 area here. And beyond that, well, heck, we got to look at the old high, 2015 or higher. Did they come all the way back up to fail? Well, it's possible, but it's more likely that they go up and at least make a new high before they fail. And I'm not saying they're going to fail. That's just, if they're going to fail, that's a more likely way to do it. But who knows? The support down here in the 1905 area was certainly logical. They could have gone down there, no problem. And again, we're dealing with the Fed. If they don't like something in the Fed's statement, if something spooks them, heck, we've got support all the way down here at 1860 that is not out of the question. But I got to tell you, the momentum of this move off of the lows from last week or 2 weeks ago actually, is just phenomenal. And, I'm not going to predict a high and try to step in front of them, but I just won't be surprised if they turn down at some point. They may go to new highs first, though. So that's what we've got for you today. Hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're looking at things.